Good morning and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi in the live comment section, and these will confirm that everything is working just fine. So today we'll be talking about the key market events currently moving prices, and of course we'll also be doing technical analysis to try and understand the current market structures and where we could be looking for opportunities going forward for the day. So let's get things started by first looking at the charts and the key highlights. And I believe the key highlight for today is Nvidia stock, which happened to report earnings last night after market close. And the company literally made some bumper earnings in the first quarter of this year, having reported about $26 billion worth of revenue and also beating the earnings estimates. So the closing price as of yesterday was $945.41. But then today, as the market looks to open, we should be looking at a new all-time high that is possibly above $1,000 per share of Nvidia. So this also had an impact on US equity indices. So if you look at the price action just before midnight, we had quite some volatility happening in the Nasdaq. So this is at 11 p.m. last night. And then immediately after that, and the market opened, there was a big jump higher. And what we have been seeing is the market literally moving even higher, forming a new all-time high. So looking at the announcement of Nvidia earnings through to the current price, you can see we are up 0.9%. And earlier on, we had already hit 1% gains. So it didn't affect the US 30, mainly because the Nvidia stock is not part of the US 30 or the Dow Jones. But then the S&P 500 also performed well. So if you look at the performance since last night, the S&P 500 was up about 0.7%, but now it's down, but still up 0.56%. So that is expected to remain a core theme for trading for today. And now we may look into other features in the market before we do the technical analysis. So at this point, I'll try and look at what's happening on the economic calendar. And of course, once we go through the economic calendar, then we cover more highlights. So from the Forex Factory website, we know that we have covered a majority of the news for the week. So some of the most important news, like the New Zealand interest rate decision, Canadian CPI, as well as UK CPI are all behind us. So last night we had the FOMC meeting minutes, and the minutes were very important, basically detailing what the Fed members discussed on their previous meeting that happened 3 weeks ago. And in this case, we had quite a number of things that were very clear from the presentation. So first things first, some Fed officials are willing to raise rates if needed. And this is according to the Fed meeting minutes or the FOMC meeting minutes that were released last night at 9 p.m. So Federal Reserve officials said that their last policy meeting, that rates would likely stay higher for longer if inflation readings continue to disappoint, while some policymakers discussed their willingness to raise rates if needed. So what we saw in the last CPI report from the US was inflation slightly dropping from 3.5% down to 3.4%, but that is still significantly high and much further from the 2.0% Fed target. So in this case, the Fed members are getting frustrated that the current policy is not restrictive enough, and now they are considering the potential of holding rates for longer versus hiking interest rates higher. So that's the key idea in the FOMC meeting minutes that were released last night. So higher for longer is the official mantra, as the Fed officially acknowledged that inflation is staying more sticky than they would have liked, said Chris Zaccarelli, Chief Investment Officer for Independent Advisor Alliance. So although they wanted to cut rates, they're not going to be able to do that in the near future, and this is as a result of inflation remaining sticky. So the Fed decided on the 1st of May to keep its benchmark interest rate in a range of 5.25% to 5.50%. This is a 23-year high as it tries to get inflation down to the 2% target. So this sticky inflation is now becoming a problem. So with the core PCE annualized 3-month percentage, at 4.4%. Then the core PCE annualized 6 months percentage at 3%. Then the year-over-year change still at 3%. At 2.8%. Of course, the Fed targets is 2%. So we have stayed for almost a year with inflation remaining above 3%, and that is becoming quite a challenge for the Fed, seeing that they're not making much progress towards the 2% target. And like what we saw with the UK, where inflation dropped significantly and is almost getting towards the 2% target. So that's going to remain a key theme for trading today. And I expect this to be good news for the dollar, meaning that we expect to see a much stronger dollar trading for the rest of the day. Then there was the big earnings last night after market close, where Nvidia announced its earnings. So I'll try to highlight the key data points here. So one, earnings from Nvidia data center revenue were quite huge, bigger than expected. Then in the current quarter, Nvidia expects revenue to reach 28 billion. Remember, the expected was 26.6 billion, but now it has been revised upwards. So towards the end of the first half of the year, we should be expecting second quarter earnings to be around $28 billion. So the company announced a 10-to-1 stock split. For those who don't know what a stock split is, it's basically a simple endeavor to make the stock cheaper. So as the price of Nvidia stock approached $1,000, it becomes very expensive for retail traders and the company employees to buy even one share because they deem it to be very expensive at $1,000. So a 10-to-1 stock split will basically multiply the number of shares by 10. So if you already hold 10 shares, then you will have 100 shares. But then the price of each share is divided by 10. So from $1,000, we expect that the share of one Nvidia stock will be trading at $100. So this doesn't change the overall valuation of the company or the shareholders. The only thing that it does is to make the shares affordable. So if you are an employee who could not afford to buy one share at $1,000, now you're able to buy one share at $100. So that's basically what happens with a 10-to-1 stock split. So it's often taken as a positive thing in the market. It basically shows that the company is considering retail investors. And often than not, you'll realize that when a 10-to-1 stock split happens, you normally see the market reacting positively. So the demand for the H200 Nvidia chips, as well as the newest ones that were recently announced, it's high market, and as a result, we expect to see continued increase. So in this case, the positive earnings are expected to drive more momentum in Nvidia trading later today. So after the report last night, you'll see that the closing price was $949.50. But then in aftermarket trading, the shares increased by over $66, which is about 6.85%. So the opening price today is expected to be $1,014.50. So this means that we'll be expecting to see the stock price opening at a much higher price. And for anyone who was betting on Nvidia beating earnings estimates, then they will be opening at over 6.84% profit. So that's the key highlights for the day. And now I believe we can jump right straight to the title or the heading of the snapshot. So if you look at the title, we basically talked about the S&P 500, the S&P Global Flash Manufacturing PMI, as well as Flash Services PMI and Flash Services PMI that are distributed monthly by the S&P Global Company. So what happens is that these companies will conduct surveys and collect data from major players in the manufacturing sector in order to understand the trends happening in manufacturing. So in Kenya, we normally use the word procurement, or orders are made to the company, and the company looks to serve those orders in the near future. So for a majority of these major economies, they call it the purchasing manager's office. So from the purchasing managers, you will be able to track the orders that have been made towards the manufacturing companies. And when you combine them together, then you have the average orders that have been made to the manufacturing industry. So when you track this number, you're able to project how the manufacturing sector is doing. And of course, it's a leading indicator because you can see the potential outcome in the near future. So for a majority of the major manufacturers, they don't manufacture based on the current market events. They manufacture based on the current orders, which is the demand for tomorrow. So when you track these orders, you know that these companies are going to be producing this amount of products. They are going to increase their manufacturing, and they're going to hire more people. And it's often a good indicator when manufacturing PMI is increasing. So we know that the majority of economies are mostly driven by manufacturing, but services sector is equally as strong. So the services sector is very important for any manufacturing, for any economy, and they also track the orders that have been made in the services sector. So when you look at the purchasing managers index and think of services, then think about the number of jobs being created in the economy, the demand in the economy. So when both indices are positive, it shows a very healthy economy. And when both indices are negative, then it shows weakness in the economy. So the way to read this indicator, for most economies, you'll have 50 at the midpoint, and values above 50 reflecting improving conditions, and values below 50 representing worsening conditions. So this morning we had quite a number. So I'll try and add a filter here just to make sure everything is okay. So fast forward here, we had flash manufacturing PMI from Australia, which came in at 49.6, which is the same exact number as the previous month, meaning that the manufacturing sector in Australia is currently below 50, so it's still under contraction. So these contractions are not very good signals for a good economy. You want to trade when the manufacturing is expanding. This is when the currency will be the strongest. So also, if you look at the services sector, it was expanding at 53.1, but then this was a slowdown from the previous reading of 53.6. So for Japan, flash manufacturing PMI jumped into expansion. So from a previous reading of 49.6, we expected to see 49.7, but instead we got 50.5. So this was quite positive for the JPY. Then we have French flash manufacturing PMI coming in at 46.7, still in contraction, but good improvement. Whereas services were at 51.3, dropped to 49.4, so negative performance. So for Germany, a slight improvement in manufacturing and big improvement in services. Manufacturing is still in contraction, but services are in expansion. Then for the overall Eurozone, and this was data that was just released at 11 a.m., we had an improvement to 47.4, and for services, it came in as expected, as the previous reading at 53.3, so missed the expectation of 53.6. So in most cases, you realize that the currencies that are mostly moved by these flash manufacturing and services PMI are basically the euro, the pound, and the US dollar. So we'll be getting data for the UK after this session at around 11:30 a.m. So in this case, in 7 minutes, we'll get the flash manufacturing and services PMI for the UK. So previous reading was 49.1 for manufacturing. We're expecting an improvement to 49.5. And of course, for services, it was 55. We're expecting a slowdown to 54.7. Then for the US, this will be released at 4:45 p.m. later in the day. So previous reading for manufacturing was 50.0, which is a midpoint, and we don't expect much of a change. But then for services PMI, we're expecting a slight slowdown from 51.3 to 51.2. So when you think of flash manufacturing and services PMI, think about the central bank policy and how this may affect the central bankers. So the US has been looking to slow down the economy, but then if we see a strong manufacturing and services sector, it means that there will be more jobs being created, more production being happening in the economy, and as a result, you expect a booming economy, which tends to be inflationary. So knowing that the Fed has been fighting inflation, strong growth in manufacturing and services will tend to make the job harder for the Fed, which will fall into the narrative of interest rates remaining higher for longer, or even considering much higher interest rates, which is positive for the dollar. So on the other hand, if manufacturing and services PMI are weakening, it means that the economy is cooling down. It basically implies less inflationary pressure, which adds confidence that the Fed may start cutting rates. So a slow manufacturing and services PMI will tend to be negative for the dollar, but an uptick, if it's higher than expected, then we should be getting a much stronger dollar for the day. So having talked about that, now we may move to some technical analysis and try to understand where the market might be headed next. So we'll be covering the majors. We'll be looking at a couple of commodities and, of course, the top indices in the US. So the dollar index has been on a steady rise, having bottomed on the 16th of May this month. So since then, we have seen the dollar creeping higher. And following this pattern, we have been seeing these two trend lines being respected quite well. And now the market seems to be pulling back today. But then the overall expectation is that this momentum continues. And if this momentum continues, then we should be expecting the market to continue creeping higher and eventually getting towards the upper trend line. So in this case, as the dollar index tries to pull back, then we should be looking for a potential bounce here where the market could potentially, I'm not saying it will, but if this pattern continues holding, then we continue seeing this kind of momentum until we get to the upper trend line. And as a result, this could mean the dollar strengthening against other currencies. So for the Euro USD, what we are seeing now is a pattern that is emerging on the lower side. Remember, we had already established a pattern on the upper side where the market was facing resistance along this trend line. And now, after dropping for the last 3 days consecutively, today it seems to be bouncing quite strongly. And now we are on an upswing where the market is potentially headed towards the upper trend line. But then we could be seeing the dollar regaining some strength and pushing further back downwards. So for the USD trading against the Swiss franc, there was quite some impressive rally. I remember we covered this on Monday and we expected the market to break this area and get to this area. So it played out quite well on Tuesday and Wednesday, and we go to the targets. And now this is the level we are watching to see if the dollar will be able to sustain the momentum upwards or whether there will be a pullback at this area. So it's a wait and see scenario to see the kind of price action that happens today before we identify whether the market will be forming a new high or a new low. So far from yesterday's price action, it seems like the market is entering some form of triangle, and a triangle is often a consolidation. So in this case, we can see the average price being this way. So we monitor to see whether there will be some form of breakouts happening later in the day, perhaps above or below these two trend lines. So we should be looking at this as a potential scenario where the market is just moving sideways until we see momentum coming into the markets. So for pound USD, remember yesterday we had some big news from the CPI news. So there was a big spike, and at the session we speculated that the price would pull back downwards. So in this case, the market erased all the gains it had made at the spike, but did not proceed to move further downwards. So the idea was invalidated. And now what we are seeing is the market attempting to make another rally upwards. So if you judge from what we saw yesterday, then these could be our limits for the day. So the highest price yesterday and the lowest price yesterday. And now you can see right from the market open, it seems like a market that didn't have much volume, but now as we enter the London session, you can see volume coming in, and the market is driving right towards yesterday's high. So we should be looking at a potential for the pound gaining momentum against the dollar. As we have seen, the dollar index is quite weak for the day. So at some point, I expect the dollar to regain strength, but as per now, as we hold this session, I expect that momentum to continue. So for the New Zealand dollar, there has been quite a nice bounce. So we speculated on this yesterday, the market reversing the entire move after the Reserve Bank of New Zealand held interest rates at 5%. So we saw the move happening and we go to our target, and now we are seeing the New Zealand dollar strengthening again, which means that this pattern remains strong. And now we are on another swing where the market has bounced from this area and is potentially headed towards the upper trend line. So for USD CAD, I remember we covered this double break. So there was the first break, market pulled back, made another break, pulled back to retest the trend line. And then our target as per yesterday was on this line. So the market managed to make that rally, got to 1.369. And once we go to that price level, we are seeing the market pulling back downwards. So in this case, if the dollar weakness sustains for the rest of the day, then a nice target would be around 1.36609. But be careful, as I mentioned, I expect the dollar to regain some form of strength. Potentially, this could happen at the New York session. So for AUD/USD, we expected to squeeze in some short selling position with a condition that the market breaks this out. So the condition was right here. So the market broke the support and then accelerated down, didn't quite get to the target, but well in, I think this was a good drop. So having seen the market break, this was a nice squeeze down to this price level. So it's not always that the market will always get to the predetermined target. So for USD JPY, we have seen the market continue to climb higher, and now seeing the dollar index being pretty weak, then we are about to break a major resistance level. So remember, this swing was the swing high we saw a few weeks ago, and now the market has crept upwards, and now it's potentially breaking this area. So a breakout above this price level, the previous high, would be a signal to go for bullish positions. But then if the market is unable to break with high momentum, then we should hold our hands and wait for a potential reversal. So as always, remember, these sessions are purely educational. They do not represent any form of investment advice. It's not a recommendation to trade, so always do your own due diligence and practice proper risk management. So silver managed to make that break. I remember discussing this. So yesterday, as well as the previous day, as well as Monday, we identified this high and these low price levels. And we mentioned it doesn't make sense to trade at all in between, but then waiting for the breakout will be paramount in identifying a trading opportunity. So we highlighted this area as well as this area here. And we mentioned that if the market happens to break this, then it's a signal. If it breaks this, then it's a signal. So towards midnight last night, silver price managed to make this break here. And as usual, whenever you have a major break, you normally expect to see the market making a retest. So the retest happened, and then this morning we had this acceleration downwards. So I hope you are able to capture that. And now looking forward for the rest of the day, it means that silver prices are still bearish, and this being a previous resistance area would potentially serve as the current support. So we could be seeing the market dropping further back downwards. So also notice that 30 price level was a psychological level that has been holding for quite a while. So when silver broke the 30 price level, it was big news, and now it seems to be bouncing from that area. But from technical analysis, from recent highs and lows, it seems likely that silver could potentially continue dropping before continuing the rally. So also remember to look at the higher or the bigger time frame. So the bigger time frame is still indicating a very strong momentum in silver, save for the last 2 days where price has been moving further back downwards. So in this case, it's a pullback in a very strong bullish trend. So the overall sentiment should be to follow the trend, which is quite bullish. And now we are seeing a rare opportunity of a pullback. So in this case, we look for evidence of buyers entering the market to squeeze in some more bullish positions. So As for gold, what we are seeing is a breakout. So yesterday, we speculated that the market was on a downswing from this upper trend line towards the lower trend line. So eventually, the market made this huge drop. The drop was a breakout. So it was a breakout below this particular trend line, which led to further bearish momentum. So in this case, from the 1 hour chart, we had quite a significant drop. And now it's time to start thinking about some form of reversal. So in this case, after the strong bearish momentum, remember from the daily chart, it's still a very strong momentum for gold, which has been trading bullish for the better part of the year. And save for the last 2 days plus today makes it 3 days. For the better part of this month, we have been on a bullish momentum, and we could be seeing gold prices resuming their bullish momentum. So if you missed on the bearish momentum, just be patient and wait for signs of the market making a change and potentially making some more bullish momentum. So in this case, if you look at this price level area here, and remember, support and resistance are not specific prices. They are zones around which the market psychology changes. So in this case, you can see on one side it was serving as resistance, now turned into support, and now noticing that the price of gold did not hold here. It just kept going downwards. Then it seems likely that we could be seeing an extension of the bearish momentum. But then at some point, we should be expecting some form of recovery. So somewhere within here, this is the idea that the market goes back upwards. So we don't know when it will happen. So we remain patient and observe the price action as the day goes by. So Brent oil continued with the bearish momentum. We identified this on Monday. So Tuesday and Wednesday, we have continued seeing further bearish momentum. So yesterday, this price level did not hold. So the market kept going downwards, and now it's attempting to make a bounce here. So notice that we didn't quite get to the previous low. So there is still that an opportunity that the market could go further downwards. So notice how we had this bounce, and then the market continued with the bearish momentum. And now we are seeing another bounce here. And the upper trend line hasn't been broken yet. So if you go to a smaller time frame, say the 15 minutes chart, then you notice that there is some form of consistency in this momentum. So every time the market gets to cross to this trend line, eventually finds resistance and moves back downwards. So this is the price level to watch here. So you watch the price action here, and potentially if there's a break, we change the narrative to upwards. But for now, if it maintains the same price action, then we should be expecting to see further downwards momentum. And remember, I believe from the economic calendar, we should be seeing some more news later in the day, and this includes the natural gas storage data. So yesterday we had crude oil inventories coming in at 1.8 million, which was a big improvement, and an increase in crude oil inventories tends to be bearish. So that's why we saw the big drop yesterday. So today, as the market attempts to recover, we could be finding resistance here in the market moving back downwards, but then it's a wait and see kind of scenario. So a big momentum in the S&P 500 after the Nvidia earnings. So this led to a very strong rally, and now we are seeing the market moving downwards, but on very low volume. So if you look at the average size of these candlesticks from this point all the way up, it seems that they were very strong. But now you can see the candlesticks as the market pulls back downwards is quite small, meaning that the market is moving on low volatility, and we could be getting higher volatility at London Open as well as the New York Open. So we should be looking for a potential extension of the rally. So from the daily chart, it seems like the market pulled back, made a recovery, broke out to a new all-time high, and from here we should be expecting to see far more upside. So it's a resistance that was tested a couple of times. So now there is also that potential that the market could retest the area. So remember, when you have a breakout, sometimes it's within reasonable expectation that the market could pull back, retest the area before making an extension of that breakout direction. So the idea is to look for more bullish momentum in SP 500. So while the Dow Jones tends to be weakening, the Nasdaq is also forming new all-time highs. So after yesterday's price action, I expect to see some further momentum upwards. So we should be looking for more momentum, especially at market open in the New York session, when Nvidia shares start trading again. Bitcoin has been consolidating. So in this case, if you look at the 4-hour, the daily chart, we have seen the market trading within this pattern, attempting to break 2 days ago and then failing. So after failing to break that level, pulled back downwards, but then the pullback doesn't seem to be having all that bearish momentum. So from the price action on the smaller time frame, in this case a 15-minute chart, we saw the market forming a flag and breaking the flag. And now for the overall pattern, we can remove the previous trend lines and now focus on something different. So the highest price we got was 71,976. The lowest price we got was around here, 68,818. And the overall price action movement seems to be following this trend line here. And then on the lower side, if we try to find a line of best fit, then this is what we are looking at. So more of a triangle with sideways momentum. So the overall price action for the last 2 days plus today seems to be sideways, which is synonymous to a market that is consolidating. So we, as usual, look for a potential breakout here. So the market could potentially make a breakout here, which would signal a bullish position, and a potential breakout here, which would signal a bearish position. But for now, the market is just consolidating. So Nvidia is expected to form a new all-time high at market open and could potentially extend the rally for the day. So natural gas futures managed to bounce from this area rather than the expected area here. So formed a new high, and now we could be seeing the market extending this. And this is based on the natural gas data that will be released later in the day. Then we have the high-grade copper futures making a big sell-off after being one of the best performing assets in the month. So after the big rally, you can see that this represents a very strong entry by bears in the market. So we could be seeing this being extended. So the price action of, I would say, 5 straight days has been erased by just 1 day. And now today, we could be seeing an extension of the bearish momentum. So in this case, it was a very strong sell-off in high-grade copper futures. And we already have a trend line playing along this area here. So there's still more room for downside momentum if this trend line was to hold as support going forward. So there are other price levels, including the previous high. So there's still the 4.6919 price level. So we could be seeing the market extending to that bottom before bouncing again. So lastly, Canadian dollar trading against the yen. We found the resistance here. Market pulled back yesterday. We expected to see further down momentum. This did not happen. So the market is really attempting to break this resistance. So while the yen remains weak and the dollar continues to attempt to break to a new all-time high against the yen, then in this case, the Canadian dollar is also strengthening against the yen. So we continue monitoring this area and invalidate the idea of the market moving further downwards, having seen the market find support over the last couple of days. So this week, right from Monday, it seems like the market is just getting support along this line. So Monday, Tuesday, Wednesday, and today being Thursday, so the market is unable to break below this trend line, which means that this resistance risks are being broken, and a trading idea could emerge if the market happens to break above this line. So that's it for the day. Now I'll be checking on the questions to see if there's any questions I've not answered before we end the session. So hi Jason, hi Robert Kovale, hi Faith Rono. USD card, what is your analysis? I've already covered that. So what else? How long you are trading? I've been trading for more than a decade now. Is GU targeting 1.27425? Then boom short. Let me check. GU is a short for pound USD. I think your idea is already playing out. So we are seeing the market immediately pulling back downwards. So in this case, as I discussed earlier, an idea would be to look for these extreme price levels. So from the dollar index, we should be seeing something playing out. So the dollar index is still moving downwards, but the pound doesn't seem to maintain the bullish momentum. So as I mentioned, there is a very strong likelihood that the dollar will start recovering against other currencies. And in this case, we are seeing the dollar recovering against the pound. So in this case, these two extreme price levels might make more sense, where the market either breaks or trades below this area. So for now, we are somewhere in the midpoint, and this line is serving as the support. So the London Open doesn't seem at all to be bringing a lot of momentum in the markets. So in this case, you look at this and the way the market has been behaving this since morning, then we should be tracking to see if there's momentum. In this case, we are seeing the market pulling back downwards. So let's observe for the rest of the day, especially on the 1 hour chart, to see if there's any evidence of momentum in pound USD, which has been having these slow moving candlesticks, and the tails are getting longer now. So what else do we have here? Will the BRICS affect the US dollar strength in the future? Will it stop to be major currency and what of trading in the future? So the BRICS are basically de-dollarizing, moving away from the dollar. And main reason they are doing this is because the US has been abusing the right to print money, which is basically diluting their holdings. So especially if you look at the major holders of US debt, Japan and China, they hold out of US treasuries. And as long as the US continues printing, those treasuries trade at lower valuations. So they are trying to move away from the dollar. The US will lose. Losing my connection here. So the last point or the last question here is asking about the HK50. So the Chinese equity indices have been doing really well this year. So we can check on that. So the Hang Seng 50 index is now currently pulling back downwards. This has been happening for the last 3 days, but the momentum or the overall trend has been pretty strong. So from the daily chart, this is what we have. So very strong rally, and if you measure from the beginning of the month to the highest we have seen, it was up 11.89% in the month, pulling back downwards. But the overall trend is a bullish momentum. So from a smaller time frame, if you go to 4 hour chart, you notice the pullback. 1 hour chart, this is how it looks like. So it's a market that has been on a very strong bullish momentum, but it has recently broken the lower trend line. So in this case, I believe it's still bearish. So we should be looking for some potential support. So right now the market seems to be headed this way, but then the idea is to be looking for potential setups that might be representative of a bounce, and that could play out at any price level. We don't know this yet. So it's a market that you want to be patient and try to identify a potential bouncing point, having seen the overall trend for the entire year being a strong bullish momentum. So that's it for the day. Thank you very much, guys. Thank you for your time. So if you are looking to begin trading, make sure to check for the links in the comment section below. You'll find links to register for our trading account. And of course, if you're a beginner, make sure to check out the Novice to Pro series available on YouTube on the FX Pesa channel. And then from there, you can build your trading skill. So that's it for the day. Thank you very much, guys. Thank you for your time. And I hope to see you on the next session.